Oh my, yeah, it's another day, right? So I've just reacted to this on Twitter and I just have to guys show you because like this is just insane, right? Strategy, as in, MicroStrategy, the, Bitcoin financial engineering company is announcing some crazy financial instrument. I haven't looked into it in depth to be honest, but like the first thing that came to my mind is just like Charlie Munger needs to be like spitting in his grave that you could generate electricity for at least a year for average household because this is just insane. Some financial shenanigans here that are usually happening somewhere towards the top of the market cycle, right? So who knows, the market might be getting hotter and hotter for years to come, but yeah, this is definitely not normal. So let's get back to planet Earth and let's look a little bit more into actual practical details, right? Because once again, companies, stocks, those ticker symbols that you see on your screen, PLTR, AMD, and VDA, like all of these are, there is something behind them. It's not just the ticker symbol on the screen, right? And you have to act like it, right? So there is real ownership, so don't try to, get rich, all of a sudden with some speculation on just like, I mean, I don't even want to show you, like, this is just so insane, and like, I don't even want to propagate this. But let's get back into, again, back on the ground, back, like, let's act as adults here, right? Buy real companies with real products, real revenues, real employees, and back into, what makes portfolio grow into 7 figures, potentially 8 figures beyond, right? So we get into lesson number 7, US tech hegemony, right? So I'm not sure if some of you guys might have played, the civilization game, on, the strategy game where you're kind of like moving, the army and, civilization, right? Well, there are a couple of ways how you can win, right? You can win through science, culture, domination, or religion. And in our world, scientific victory driven by technological progress is the true path to global dominance. And the US is not just leading the race, it's solidifying its hegemony by attracting capital and earnings from every corner of the globe. Because many people believe that investing in majority of their net worth in the US stock is a risky proposition, right? And some people are just like, you have to diversify, not just in the US, not just S&P 500, you have to go for the world index, right? Not just 500 best US companies, but let's just spread all of the wealth, like across the world, right? Just like, and that's driving me crazy sometimes because like Peter Thiel would really hate this, right? Because there's just this indefinite kind of non-bet in a sense, right? Because so what? So you have just like this tiny sliver of like everything, like very like as investor you're actually setting the direction, right? You're making that conscious choice because by just simply diversifying across the whole world index, like what's the merit in that, right? You're just basically kind of indefinite bet on the future, but you have no clue where the world is headed. You actually want to like spearhead the development, right? So basically people argue that relying solely on the US on the US market exposes investor to potential losses. If the market underperforms, the conventional wisdom advises diversifying investment across global market to seize the opportunities everywhere. But if you have a little bit of everything, you also have basically, nothing at the end of the day, right? Because today's companies operate on a global scale, offering their products and services worldwide. The growth of these businesses outside the US is surpassing their domestic growth, amplifying the US hegemony. The US market houses the majority of best brains, top finance, and existing technological leaders. This concentration of talent and resources position the US as the market to watch. Because let's say, you guys know I'm in Europe, right? What do I have in my pocket? I have my iPhone here, which means, like the money that I've paid for this is going to Apple, right? It's not going to some local company here in Europe, right? I'm using Windows on my laptop, right? Windows, right? That's Microsoft, US company. I'm using Google, right? I'm using ChatGPT. I'm using like basically everything across the stack. It's US company, which means the money I earn is going to the US for the products that I'm buying. Sure, I might buy some local, a little bit of furniture here and there, or like other stuff. But the expensive things and things with big margins, again, like software, goes to the US, right? So it's crucial to know that investing in US companies goes beyond mere patriotism, right? It's about identifying businesses with high growth potential over the next decade or two. While opportunities exist in Europe and Asia, sure, there are some companies and there are some gems that can be found everywhere. But the US offers the most promising prospects. Contrary to popular belief, investing substantially in the US stock market is a prudent decision. The US dominance in tech world, driven by global reach, talent concentration, and investment inflow, solidifies its position as the leader in the field. The trajectory of US corporations and their increasing earnings from overseas markets further strengthen this, right? And as the world becomes more interconnected, the US will continue to reap the rewards of its tech dominance, and it just builds upon itself, right? And it's time to embrace that power of the US tech and seize the opportunities, right? So all of the money goes there, the best talent goes there. It's this drain. So that's the place where to find the best companies. And side note here, stillness is a strategy. Most people think that the hardest part of investing is figuring out what to buy. It's not. The hardest part is sitting still when nothing needs to be done. At 7 figures, the temptation to tinker is constant. You feel like you should always be optimizing, rotating, upgrading, doing something. After all, you made it this far by being active and intentional. But that same impulse, left unchecked, becomes your biggest liability, right? So when you're smaller, you're a little bit more active. You're putting new money in the market, right? It's much more nimble, proactive, right? But as your portfolio grows, it becomes a little bit different game. The game isn't about constant motion anymore. It's about precise deployment. The best investors in the world spend most of their time waiting. Sleep waited years before buying Costco. I mean, Sleep as in Nicholas Sleep, one of the investors. Klarman sits on billions in cash for long stretches. Druckenmiller flips from 80% risk on to nearly flat in a week and then sits. Doing nothing is often the hardest work of all. Lesson number 8. Compensated for what? You get paid to be right. You get paid to be brave. You get paid to be pillar in the storm. Most people misunderstand what investing actually compensates you for. They think it's mostly about being smart, analyzing companies, predicting macro, doing the proverbial due diligence, buying low, selling high with perfect timing. And to some degree, it is all of the above. But there is one more brutal and unspoken part. You get paid for holding the weight, for making decisions that feels uncomfortable, for staying in the game when others fold, for owning your calls when the market disagrees. Uncertainty is a feature, not a bug. People pay insane premiums for certainty. That's why treasury bills yield 3% and startups can 100x. Most people are not okay with uncertainty, volatility, risk, and they're basically paying underperformance for that, right? So uncertainty is exactly why outsized returns exist in the first place. When you make a well-researched call with incomplete information and you hold, it's not luck when it works, it's courage turned into capital. The heaviest decisions are the most profitable, the ones that haunt you, the ones where your voice shakes when you explain it, the ones where nobody agrees, but deep down you know you're right. Enduring pain when others seek safety is what gives you a shot at asymmetric upside. And the more capital you manage, the more pressure you'll face to act. Real wealth is built by making fewer, bolder decisions and owning them. Through noise, through drawdowns, through moments of doubt. If you can't carry that weight, the market won't pay you much. But if you can, the rewards are extraordinary. Market fluctuations. Wall Street plays the game in quarters. You're playing it in decades. Most fund managers are judged based and paid based on a 12-month performance, right? Year. Their bonuses depend on short-term outperformance, not long-term compounding. That's why they obsess over earnings calls, macro predictions, monthly flows. They can't afford to look wrong, even temporarily. So they shuffle portfolio to protect their year-end bonuses. You can, and that's your edge. You're not managing someone else's money. You're not optimizing for quarterly optics. You're building real wealth over lifetime. Act like it. Lesson 9. Temptation of shiny object. The distractions don't disappear at this level. They get more sophisticated. You're no longer getting lured by meme stocks or spammy newsletters, as when you were having few thousand. Now temptations come with better packaging. Macro calls from billionaires, high-end fund pitches, hot AI names everyone swears are the next Nvidia. The danger isn't foolishness, it's false confidence. Because now you have capital, competence, and some wins under your belt. You think you're immune. But the bigger risk is doing too much. Tweaking, rotating, overtrading, not because you should, but because you feel like you need to. You might forget what made you successful in the first place. You'll be tempted by smart people making loud predictions, fancy decks promising 20% IRR, overweighting the story you've heard at lunch, selling boredom instead of trimming weakness, taking a tiny position just to feel involved, complicating your portfolio to feel like you're managing something. The market rewards clarity, not motion. Look at how Klarman operates, or Druckenmiller, or Sleep. The common thread? Discipline. Waiting, letting others chase heat while they sit on cash, until it's time to strike. At this level, your real edge is the ability to ignore 99% of what's going on and wait for that 1% that actually deserves capital and matters. Most people don't lose money because they make one terrible mistake. They lose it inch by inch, distracted by noise, pulled into average ideas, eroded by motion. Rest is the temptation to play when there's no edge. Hold still, be patient, let the game come to you. Temptation never disappears, it just upgrades its costume. Stay sharp. And side note, preservation of fire. Success creates comfort. Comfort dulls hunger. And once you're managing real capital, the danger isn't failure, it's coasting. The hardest part of growing wealth isn't the first million. It's staying sharp after. Once the bills are paid, the urgency fades. You have more than enough. Enough is where ambition goes to die. That's why the pros treat wealth like fuel, not a finish line. They keep a fire lit under their chair. Not because they need the money, but because they refuse to go soft. Never forget what got you where you are. Focus, ownership, discomfort, and the willingness to think independently. You can be wealthy and still be hungry. That's what separates investors who plateau from the ones who compound into legends. Hunger isn't about need, it's about refusing to settle. Refuse to settle. See you soon.